Hey everyone, everybody's probably wondering what rates are doing today. This is Vince Reese, Colorado Mortgage Guy, powered by Plum Creek Funding. I hope everybody's staying healthy during this time, and I'll still be doing business. I'll be meeting with a lot of people via video conferencing, which I'll help you walk through. This can still give you a face with the person when we're running appointments and things like that because of the fears of the coronavirus. I will also try to explain to you right now what the market is doing and the conditions and how it's affected the mortgage industry. So please, hear this. The Fed did not decrease mortgage rates. So I'm going to try to explain this to you. There have been several instances where the Fed has either increased or decreased the Fed rate and the mortgage rates moved in the opposite direction. Sometimes the Fed rate went up and mortgage rates still went down, and vice versa. Fed rate went down and the mortgage rates actually went up. So the Fed rate is not the mortgage rate. So I'll try to explain a little bit exactly what the Fed rate is. So the Fed fund rate is a short-term rate. It has been called a rate for loans up to 1 day term. This means that mortgage rates do not typically align with the Fed rate. So the bond market is going to be your biggest trigger in regards to what interest rates are going to do. So the bond market plays a major role. Bonds are bought and sold, traded in thousands of times a day. The Fed typically meets less than 12 times a year, and mortgage rates typically change daily or even sometimes 2 to 3 times a day. So again, the Fed rate doesn't have a major impact on the mortgage rates in the short term. Now, we're going to see some rates start to balance out a little bit and stabilize and kind of see what's going on there. So the other part of it is the QE, or quantitative easing. This is simply where the Fed initiates large bond buying. So again, the bond market plays the biggest role in what interest rates do. So the more bonds that the government sells off and gets purchased, then the better the rates are going to be. So what I'm hoping to see over the next couple of weeks is where the economy settles down and rates actually come back down, not all the way down to 3%, but down to a decent rate where they were 3 weeks ago. So what I'm asking all my clients to do is, let's go ahead and get your loan in process. Let's run the numbers to see what rate's going to make the most sense for you. And then as soon as the rate hits that mark, we go ahead and lock it that day. But remember, just because the Fed lowers interest rates, that does not directly affect the mortgage rates in the short term. Again, this is Vince Reese over at Colorado Mortgage Guy, powered by Plum Creek Funding.